So good morning, everyone, and thank you very much for joining us once again. I look forward to an interesting session. At the moment, where we are in terms of, I think, the insurance industry as a whole, and in particular, when it comes to technology, this part of the journey is probably, for me, the most exciting and probably also the most important. Where we are at the moment in terms of insurance and technology, and where the industry and technology meets, is basically built on partnerships. The days of all the technology and the technology skills, the IT skills sitting inside an insurance company are long over. And even the biggest of global insurers are more and more moving to partnerships and moving to collaborating with people that have very specific skills, but also collaborating with people that have markets and that can provide them with access to markets. And so I think this part of the innovation journey is probably the part where most of the value can be unlocked for future business for insurers. And therefore, it is an area that we cannot afford to neglect. And it's an area that everybody needs to build skills in terms of partnership, managing partnerships, and collaborating with others. So I'm very happy to have two good collaborators, Daniel Guasco from Click to Sure. For those of you that have followed this journey through the different sessions, would have seen Daniel's first presentation. And then we've also got Andre Symes, very well known. Andre at the moment operating from the UK, but very much a South African business, deeply embedded in the insurance industry in South Africa. So Daniel and Andre, thank you very much for your time. And I look forward to your presentations. Into it, you can
Okay, cool. Yeah, so thank you for the opportunity. It's yeah, for those that were in the first session, it's back again. And to Tony's point, we'll be covering the importance of building ecosystems, creating ecosystems, and the partnerships that can exist. I want to start off with just a little video that we'll play as kind of a kickoff, which was created by Deloitte, obviously one of the major consulting companies, very active in the insurtech space. And so I'll start off with that. I'm just going to share my screen. I hope you can see that. It's only about 2 minutes, and then we'll go straight into the presentation. Great. So that was just a bit of an overview of maybe some of the shifts that we've seen. I think you can still. I thought I'd just start off with that just to stimulate the thinking in terms of where we are and some of the opportunities that exist. And a little bit about ourselves first. I'm the founder CEO of Click to Show. We are a cloud-based modular software as a service platform solution provider to, I suppose, two categories: either insurers, traditional insurers, that are looking to capture the opportunities that are materializing in the market, or alternatively affinity partners who might be offer insurance or looking to offer insurance in parallel to other core offerings that they have. And so I guess we've been very much at the forefront of seeing both the opportunities, the challenges, and really the need for this collaborative approach associated with insurance. There's a role for everybody to play, and it's imperative that the skill sets and capabilities of these different partners that already are in the ecosystem work together. And by and large, I guess we sort of oversee that, or overlay that. So maybe what has changed? I mean, why has there been this shift away from? Why is there now this ecosystem opportunity? Why is there this partnership opportunity? What has changed in the industry or in the environment that's enabled us to take a slightly different approach to what we have in the past? And so if we just look at a couple of aspects, and those that were in the prior session will maybe remember the slide. But if we look at distribution, by and large, it was, in person. There was that evolution sort of towards call centers as mobile phones and connectivity changed. And I'm talking about 20 odd years ago. And then there was an element of sort of self-service, but by and large, that sort of led back into call centers or in-person broker-led interventions. And the shift that has materialized here after is that, through connectivity, Internet of Things, e-commerce, all these new points of engagement or opportunities where one can embed insurance, new opportunities are materialized. And so, traditional insurance as it was sold through a broker or an agent or call center, face compliant individual that intermediated that process, there's this new opportunity that's materialized where, potentially self-service and or embedded type insurance has become a huge opportunity, an evolving opportunity. And of course, that requires a different capability and a different approach to capture that opportunity. With a call center in-person kind of interaction, it's a digital interface, but where you're looking at an embedded opportunity into an e-commerce transaction, just as an example, it requires an API, a different type of approach, a different type of integration, which traditionally the industry don't have and haven't had. And so, there's sort of an evolution and need for a new type of solution. Of course, on the administration side, very much paper, pen, Excel has been the legacy of how these things have operated, and that's then evolved to an element of digitization with on-premise servers. But that's now moved to sort of more cloud computing and always available data, and the integration into these checkpoints around customers and how they purchase in, but also how they choose to administrate and change their policy details, change bank account details, lodge claims, all these functions that were always there that used to be intermediated by people has now evolved. And of course, if we then have real-time data, real-time administration, the ability to get real insights, real visibility on what's happening within your book of business or within your channel becomes a reality. And that then allows for real-time data that you can make informed decisions about. But again, there's that element of technology and layer that's needed to enable that. But there's also a requirement from the underwriter or insurer side to be able to adjust according to that real-time data. So what I'm really highlighting here is elements of how the industry has evolved. And the new entrants into the ecosystem, which are becoming enablers to these new opportunities. But ultimately, all the prior players in the industry still play a very critical role. And it's that level of understanding that sort of unlocks the opportunity. And so, where you don't have real-time data, if you don't have those digital endpoints, API first ability to leverage these new environments, it's quite rigid and you can't innovate quickly and easily. Whereas where you do, you can adjust pricing, adjust terms and conditions, you can underwrite differently, you can administrate differently, and that's really what's the unlock that kind of starts to materialize. So maybe let's look at kind of what was wrong with the current insurance model, or what has changed really. I mean, if you look at currently, the insurance model is very much, insurers were focused on enhancing legacy systems, products and business models. So, they had broker networks, they still do. You have administration departments and functions, and those still all exist. And there's certain, regulatory and requirements in different markets associated with how one, what one has to do. None of that's changed, but there's obviously an opportunity here to enhance what has already been done, or do it slightly differently. But traditionally it's been, let's innovate internally, let's try and solve these things internally, and that's often where the challenges exist. I guess to a degree, insurers have neglected to spend and resource on innovation, disrupting sort of new products, and this hyper-personalized kind of approach. Partly because I guess it hasn't really existed, and it really has only become a reality, I'd say, over the last 5 to 10 years. So, let's keep doing what we're doing, improving what we are doing today, versus looking at what these emerging opportunities are that can radically change our business. So, the sort of future insurance model talks about improved policyholder experience, increased distribution through incremental new points of engagement, new channels, developing new innovative products, testing products and launching them faster. So the ability to, sort of A/B test different opportunities, different pricing, and obviously then looking at an efficient digital policy and claims administration process, simplifying, easing that process for the customer. And ultimately, if you have all that plugged in, you're going to have one customer view and real-time data, ultimately. We did a bunch of research has been done around, sort of what are the hurdles to reinvent or, change the insurance business model. And the biggest one that comes back is legacy IT infrastructure. So incumbent, IT systems that work in a different way, that have an API first approach, as an example. They're not cloud-based, they're on-premise kind of servers. And of course, if that's the case, it hugely limits one's ability to innovate and change and integrate into these different opportunities and channels. There's obviously, why has it become essential? Because I guess, ultimately it's rating agencies are looking at, how effectively business can initiate and manage innovation, and how the business demonstrate measurable kind of impact. And so, it's very much about that collaboration. It's about really identifying what one's strengths are. And, clearly insurers have multiple strengths, as do a technology company or software as a service solution provider, as do channels of distribution. And it's really trying to marry those things up to allow for that innovation to happen, and working collaboratively to doing that. Why has it become essential? I guess if we look at different types of markets, so at the top here, you've got, frontier markets, emerging markets, mature markets. And if you then look at the demand side and supply side, demand side obviously being customers are looking to purchase insurance, at supply side being the supply of insurance products or solutions into the ecosystem. You start identifying different types of challenges or opportunities associated with these different environments. So if we just think about, frontier markets, emerging markets, affordability, awareness are key sort of challenges. Trust. I've never bought insurance before. In the frontier type market, there can be cultural challenges, behavioral biases, which exist across all markets, and then obviously appeal. We should never forget that insurance is sold; it's not bought, and creating that need to actually purchase something is almost as critical. And on the supply side, of course, there's the transactional costs. So where there's pen, paper, people, clearly that's more costly than, we have a system, automated system using big data, automation to actually make informed decisions on the fly. There's this adverse selection, moral hazard, institutions and limits in terms of insurability. So it's both on the demand and the supply side. There are challenges or opportunities that one can, focus on and look at differently, which is really where the unlock starts to exist. And so what is blocking this innovation? I think there are predominantly organizational barriers that are limiting this in certain environments. It's, entrepreneurial type approaches, different type approaches are not native in these industries. Big, well-established, very successful corporates that have delivered, phenomenal results for many years, that are answerable potentially if they're listed to, external shareholders. Even if they're not listed, they are. And so why is this? The risk. There's a risk of change, right? So if I make this change, I try something differently. If it doesn't work, I potentially am answerable to it, or the company doesn't deliver results, and I don't get my bonus, I lose my job, and whatever else happens, right? There's obviously the innovation initiatives that's relegated to the margins. So it's the cost of innovation. There's a cost to innovate, and that can affect margins in the short term, but it's looking at the longer term view. Obviously, silos that limit cross-pollination of ideas. Traditionally in big organizations, silos do exist and can be created, and I'm looking after distribution. I've got a broker network, just using simple examples, and that's my focus. It's not about the broader scope of the business, which is that actually by looking at incremental distribution channels and complementing that already established broker network, we could actually be selling more. Just a simple example. Obviously, a lack of budget and authority, again, the sort of needing to KPIs, needing to deliver to external factors, and obviously incentives are traditionally missing for lines of business which don't currently exist. So these are some of the barriers internally within some organizations which limit that innovation. But and I guess then it's a shift to thinking from seeing insurtechs as another vendor or solution provider to actually more of a collaborative approach. So how can we actually utilize elements of innovation and expertise that's external to our current environment that can complement it. It's not a threat. We're not trying to, there are partners out there that let's just say from a distribution perspective can enable that integration and the endpoint into an e-commerce transaction. That's not potentially a threat to me as a big insurer. I can complement that, right? And so this is it's a shift in thinking about how one looks at these different players in the ecosystem, understanding what value they have to add, understanding then how collaboratively we can get to a better outcome than trying to silo and work independently. And that's really where the unlock happens, putting the customer first ultimately. So what I'm really talking about is sort of a shift in mindset. You have incumbent insurance businesses and very successful ones. You then have technology partners potentially as enablers. I think there's also another level here, which is distribution partners. But I'd say by and large, some of that has been explored. But if one can marry those two together, that's where the light bulb moment happens around innovation. It's the two working collaboratively can really unlock exponential value. And I guess the 5 key areas to turn in terms of actual benefit or advantage into, if you get this right, is improving distribution, including go-to-market and sort of sales enablement strategies. It's determining where you fit in the ecosystem. So being very clear about, I'm a platform solution provider, or I'm a neo administrator that's looking to optimize in terms of claims administration as a function. I'm a insurance company that can dynamically price and A/B test and just maybe park some of the more traditional underwriting pricing mechanisms that exist to look at things differently. It's finding and retaining talent, because often in these environments it's the talent doesn't exist internally because these organizations have been built in a certain way. And where we do have that talent, it's about retaining it, because obviously the market's become very competitive, and the search for data scientists, as an example, sort of actuaries that have worked in these types of environments and models, technology experts and programmers that can actually create these systems that are often needed to enable that ecosystem. It's difficult to find that and difficult to retain it. Obviously applying a holistic organizational view to refine underwriting and implementing flexible infrastructure for alternative models. So I guess those are 5 key areas that if one focuses on, I think you can get a lot of advantage out of from a business perspective. it's also clear that technology alone can't be entirely advance the insurance business without changing the company strategy and operating models. And so, here's just some research again that was done around how insurers and insurtechs are preparing for the future. So the big one is obviously most important is use of data, technology, digitization, automation. And I guess in our own experience, when we look at some of the environments that we worked in and we enable in, that it's quite simple. It's really just at that level. It's taken a paper pen interface in a sort of retail environment, moving that into a digital front end onboarding process. It's not even getting to the integration into an e-commerce environment just yet. But that's the biggest opportunity that exists, because still so much is done offline and in different sort of environments. Product innovation. So, once you've got this digital layer, you can then start plugging in the innovation piece. Personalization and customer engagement. And I guess these things flow quite logically if you start thinking about them, right? If you think about, I can now, I've got a layer of visibility, I've got a layer of enablement. I can now innovate on product. I can start personalizing and driving more customer engagement. We can now sort of build, once we start understanding where some of the current ecosystem is broken or challenged or not operating as efficiently, because I've got this real-time visibility, we can start building and participating more constructively in those ecosystems. Distributive transformation and ultimately optimization in terms of in-force change that's actually happening. So this is how parties out there are looking at it. And so, if you put all those things together, we can really create a win-win kind of environment where there are better opportunities to identify synergies in collaboration. We can use complementary strengths. So, I'm an expert in terms of underwriting, and there's a player out there that can, provide that layer of technology, and there's a distribution partner to which my product set would be optimally suited through that digital layer. So it's complementing strengths. It's faster product development can happen, and certainly leveraging that within the more sort of insurtech kind of environment. So, often bigger corporates are just bogged down with complexity around decision making and roles and responsibilities, whereas being able to test something quickly, easily with an insurtech who's just engineered in a different way can be a huge unlock. And then obviously faster development of technological competencies for insurers. So, leveraging external sources to do that. If we look at the traditional kind of insurance stack, and I'll dive into these quite specifically, because we'll actually identify where some of these collaborations can happen, and you can start seeing how this can kind of work. Ultimately, you have a customer or potential policyholder. You have potentially insurers that go direct, or they work through partners, a retailer, financial services company, a telco, whatever the case might be. And these are traditionally the functions that are fulfilled by that primary insurer, and ultimately why primary insurers existed. And within here, there's a lot of opportunity to change, adjust, and do things more optimally or do things differently. And so we always talk about if you look at the value chain, you really need to understand the aspects of what these different functions fulfill and how maybe that could be done differently. And then of course, underlying that is reinsurance and capital, which supports the product going to market. So, the way that we like to think about it is about digitization and modularization of that insurance stack, which is where the unlock ultimately sits. And if we identify that, by overlaying this type of digital point of engagement into a traditional channel broker-led network, and that can complement what's already done, that's an interface layer. If we work out that from a claims management perspective, there's aspects that could be digitized, automated, mitigating the need for human intervention to some degree, or leveraging data to actually identify challenges, that's another layer that can obviously be enabled through that. And so these are the more specific layers that exist. User application is obviously the onboarding of customers or interaction with customers. The switching layers, so current systems might already exist. So if you just think about into an e-commerce environment, there's already a transactional layer that happens there. It's how can you as a carrier integrate in that environment, and how can that's the opportunity. It's enabling that switching layer, which unlocks the opportunity. broker agent tools, so complementing broker agents that already exist, policy management systems, so flexible APIs, black box pricing mechanisms, underwriting mechanisms that can be integrated into this environment instead of replacing it, importation of data, integration of data, policy underwriting, so better being able to ingest and assess more data more effectively. So that's really about automation. On claims processing side, again, it's about leveraging data, fraud mitigation, and I guess you can see how within all these layers there are potentially one or multiple different types of partners that could exist that ultimately one partner almost definitely can't do, right? If you just think about it in terms of fraud mitigation and leveraging big data, there are specialists that are artificial big data scientists that are set up to understand that and to engineer it in a certain way. And so allow the experts to come and do it versus trying to potentially build it internally. That's very much the thinking. It's about working out where are the gaps, where are the opportunities across all these different layers, and then intermediating those into these channels to enable it to just operate a whole lot better. So I guess what I'm going to do now as sort of an ending point in terms of our presentation is just to use 3 case studies. These are environments in which we've enabled or complemented and created this ecosystem approach. And the first one is Massmart. So Massmart, obviously being a big retailer, as I'm sure you all know, the opportunity was, predominantly if you went into a Massmart store, physical people, paper pen, that were selling a policy of insurance in that environment. An insurer or underwriter already existed. There was a channel of distribution in terms of Massmart clearly accessing customers. But the bit that didn't exist or that could be optimized was that digital layer. So how can we digitally engage with those customers? How can we digitally onboard the customer into a policy of insurance? And then, of course, in the online environment where they have e-commerce, and how can we enable digital onboarding of customers through that checkout process? And so, that's a great example of how Massmart potentially could have gone and built that tech themselves. They could have, leveraged the insurer that existed to try and do that. Potentially as well, but they could have also have gone externally, which is obviously what they did do to allow us to solve those problems for them as that technology stack, digitally enabling that distribution, automating a lot of the administration functions, and ultimately providing real-time data, which allows them just to be more effective. So just a good, interesting retail kind of environment. In the sort of fintech financial services piece, a loan provider, GetBucks, one of the biggest sort of micro loan providers in Southern Africa, and actually extending to Africa, they've changed into rebranded. And again, it was very much about call centers, paper, onboarding of customers, and we became the technology layer to enabling that digital points of engagement, seamless KYC, payments, automated payments, and ultimately enabling those partners to still leverage the current insurance structure they had, the base of customers that they had, but then solving that technology opportunity, automation opportunity that existed. And lastly, I guess in the employee benefits space is a company called Unison, one of the biggest sort of employee benefits schemes. They had multiple different challenges. They were utilizing a legacy administration platform that wasn't real time, wasn't online. Created multiple challenges in terms of how one is able to administrate and report on insurance that they had. And so, in that environment, we've enabled a bulk of different capabilities, but they've retained all the other structures. And so I guess I hope that just maybe illustrates some of the partnerships and certainly the approach that we have, and the opportunity that we see in the market is that, I don't think it's not about replacing, it's about complementing and, focusing on where partners' strengths are. So they have a strong distribution channel, they have a amazing insurance partner. It's how collectively can we better enable that environment to ultimately sell more insurance, do it a whole lot more efficiently, and then provide real-time data, allowing you to make more informed decisions. So
thank you very much, Daniel. That was really interesting. I look forward to actually the discussion part of this. But Andre, over to you. Please share some of your experience with us.
Thanks, Tony. And great one there by Daniel. I think he unpacked a lot of the nuance that I'll be able to skip over now. There was quite a bit of detail. So I'll just quickly, or just briefly this morning, want to run over the ecosystems and effectively talk about a lot of the thinking behind or above the technical detail that Daniel went through so nicely. So when it comes to ecosystems and choosing partners, what are the things that we need to keep in mind? And, I thought about thinking about it in a slightly different way than usual. So when we look at choosing ecosystem partners, I think we should think about dinosaurs, USB ports, cables, or paint pallets. And I know that might seem a bit strange now, but let's see if it makes a bit of sense a bit later. Now, effectively, firstly, we need to ask ourselves why. Why have ecosystems become so important? It's a buzzword that we are all using. We see it in the press all the time. What is going on? Charles Darwin was famously misquoted, and by myself, I've often misquoted him here, by saying it's not the strongest of the species that survive, but it's the ones that adapt the quickest. Now, this is where the dinosaurs come in, right? And I'm using dinosaurs because what happened to them, we can liken in the business world what happened to us last year with COVID. There was a massive event. Now, the dinosaurs had been evolving for hundreds of millions of years at a steady pace, and they would have carried on evolving unless the asteroid hit. And that is very similar to what happened last year. And I'm not going to mention COVID again because it's boring. That's why we're talking dinosaurs here. But effectively, they were not able to adapt fast enough. And it's this step change that we need to be able to make to stay relevant and to change. As Daniel mentioned a little bit earlier, changing legacy systems takes a very, very long time. It really, really does. So when COVID happened, we didn't have the luxury of spending two years implementing a new system. We had to adapt quickly. And, that's how we must think about platforms, and we think about how platforms and digital services have rendered bricks and mortar companies irrelevant. And how the digital era is enabling us to change quickly. I mean, business schools at the moment, are littered with use cases about Toys R Us versus Amazon, Ubers versus taxis. And it's this digital ecosystem that they can create that enables them to adapt fast for change. And this is why ecosystems are so important. And simply put, technology options gives us the ability to adapt or pivot quickly. So again, why is this important? Technology ecosystems gives us choice. That's the really important part. Choice gives us the ability to adapt or change quickly. And this ability to adapt or to evolve faster than the dinosaurs could, or our existing dinosaurs can, is really what future-proofs our business. Nobody can predict the unforeseen or the future, but we can engineer for the unforeseen and we can architect for it. So now the question is, what do we do to enable these ecosystems? How many of us have got a pile of cables that look like this? I certainly do, and I'll bet some good money that some of you do too. But I'll go a step even further and say it's probably the bottom drawer in your kitchen that has a look like this. And the reason why I'm bringing this up is that to create ecosystems, we all have to be able to interact with each other. Now, think about this pile of cables. 20 years ago, when we all had, pre-smartphone, smart cell phones, we all had a Sony Ericsson or a Nokia or a Symes or whatever it was at the time. And each one of those had a proprietary charging system and or connecting to your PC to do your updates. And then those very archaic looking UIs that we used to have to be able to set these things up. Now, anybody that ever went from a Sony Ericsson to a Nokia at some point in time, and Nokia were one of the first to create more universal chargers, understood the challenge of trying to get data from one thing to another when there was different proprietary platforms or systems, cables connecting these things. And we try to solve for that. And, we kind of at one stage brought in these adapters, which, they worked a little bit, they didn't work. There was always a connector issue in the middle, but it sort of brought some simplicity to this chaos of all these different components or devices that we had to connect to our PC. It wasn't until we created universal connectors like USB, Bluetooth, Wi-Fi, where connecting systems or connecting devices became became easier. You know, right now I've got a USB cable plugged into my laptop, and I can do my Garmin on there, I can do my phone, etc. I can do all my things with one connector. And that is effectively what it is that we need to have. Now, USBs aren't perfect. They still change. We have different variations of it. And also, everybody here will know that trying to plug a USB in, it can only go in one way, but it takes at least 3 or 4 attempts for us to find the right way. So it isn't perfect, but it's a hell of a lot better than the cables that we had before. And that's where we want to go with our ecosystems too. Now, what is the USB in the ecosystem? That is APIs. It is, we cannot iterate how important APIs are. And this term gets thrown around a lot. And I mean, just for those that don't know it that well yet, we've got a video on our website that I'll share with the chat group later that will just explain it a bit more. But effectively, it stands for Application Programming Interface. And it's just a connector between different systems. What else do we need to think about when we think about when it comes to these ecosystems? And that is, we need to have a clear vision for how we want to do that. We need to have a roadmap. And you know, we need to also understand that it'll be better in the long term if we create a roadmap that facilitates open ecosystems. We're talking about things like, you know, Daniel mentioned it earlier, you know, an API first approach. And that's super important when looking at how you want to build your roadmap out. But again, we also need to be able to iterate and change. And I think that's where my good friend Vimpy was talking about design thinking the other day. That's also very important to bring into your conversation when you are doing this roadmap development about how do you create ecosystems. And then lastly, but super duper not least, is that we need to get internal buy-in from large organizations. It is currently a huge problem where we have large incumbents that don't adopt the future. They don't adopt the change. They don't adopt this open mentality. They all know we need to do it, but when it comes time to pull the trigger, there's often a little hurdle. And you know, then we start struggling with this change. And we saw in our asteroid from last year that those that were able to change did change, and they leapfrogged their competition. So it is super duper important to make sure that you get internal change management, even to the point where, you know, I would suggest looking at creating teams, innovation teams that can help the traditional business understand the need for this open APIs and an ecosystem approach rather than the monolithic approach of building everything yourself and to try and hoard that IP. Then the next question is the who, you know, because now we know that we need it because we want to avoid the asteroid. We sort of know how to do it because we understand that we have to have interconnection amongst the ecosystems. But then who? And, you know, there was a question earlier about, you know, what does the InsurTech ecosystem look like? Well, this is a snapshot of a very small part of it in the UK, and it is super duper messy. The question is that how do you choose out of this? What do you choose? How do you choose? And which partners here will actually create a powerful ecosystem? So that's where the paint comes in. You know, effectively think of the landscape of what we just saw now as your paint palette. We can use this paint palette with the same brush and the same canvas to create that, you know, which is really cool. And it's great, you know, if that's what you wanted to achieve. But that same paint could create something beautiful and masterful and something that is really going to change the world. And that is what we ultimately want to do. So the question is that how do you go about choosing the right ecosystem partners so that you don't end up painting something that your company doesn't want or that doesn't add value to your business? So for a couple of points of consideration, just to think about when you are looking at partners in your ecosystem. Firstly, do they improve the customer's life? If they aren't going to improve your customers or your customer's life, don't bring them on board. Then you are effectively just using tech for the sake of tech. And that is rule number one that you shouldn't do. Don't ever try and use tech for the sake of tech. There's a term, Maslow's hammer, and it often comes out in our hype versus adoption analysis. You know, as Daniel referenced some Oliver Wyman stuff there. And they, along with Oxbow Partners, come out with this hype versus adoption report. And, you know, 4 years ago, blockchain was the be-all and end-all solution to everything in insurance. And whilst there has been use case adoptions, it's gone through its hype cycle. and it's not there. So quite often we hear people just using tech for the sake of it. It has to improve your customer's life. And this is, again, I'm just touching this, that does it actually solve a business problem? That's super important. Again, don't use tech for the sake of tech. Very importantly, when it comes to ecosystems, is that are they going to embrace collaboration? Now, you would think that mentioning ecosystems off the bat, that there is going to be collab, but don't be so sure. You know, in any sort of ecosystem, as well as in the environment and the natural ecosystems, there's always a predator. And we need to make sure that all ecosystem partners are aligned to the same goal so that they can, you know, all collectively add value to the end customer or to the ecosystem. Then very importantly is that, you know, who else is in the ecosystem? You know, ecosystems overlap too. So in the latest slide, I'm going to show a very small Genesis ecosystem that we built for a motor insurer. But those people in your ecosystem, they have additional ecosystem partners. And it's very important to understand what additional aspects can be brought into your business, because the value isn't always just directly related to what you can bring and what revenue you can generate from this, or how you can improve your customers' value. But there's also power in the network effect, having ecosystem partners feeding off each other. You don't always have to be the central nucleus and you become the parasite in the ecosystem. Then you need to be able to share around it. And it's also good to understand, but again, the power of the network effect is really, really important. Importantly, is there a technical fit? You know, this is, again, do they take an open API approach? You know, can you connect? You know, these things are very important. If they don't have an API, you are just going to waste your time. But when it comes to APIs, a very, very important point to remember also is that not all APIs are the same. A lot of people will stick an API sticker on the tin saying, we have API enablement. Well, is that dynamic? Is it hard-coded? You know, are we going to incur technical debt or future legacy that we're going to have to then engineer ourselves out of? Because every time we want to bring someone in and out of this ecosystem, we have to then create new code or create a new Nokia cable. We don't want to do that. They have to adopt universal standards to make this integration easy. The whole point of the ecosystem is that you can couple and decouple partners very quickly. If you can't do that quickly, then you are just creating more legacy. And when the next asteroid comes, you're going to be stuck. Then quite important, you know, and people, you know, we love this ecosystem idea, but when you start doing the cost analysis of the ecosystem, we also need to make sure that it is financially viable. You know, the one advantage, we always talk about monolithic systems being super expensive and heavy, but, you know, once they're built, you know, you can kind of bring down their run costs a bit. In an ecosystem, you know, you have 10, 12 people all trying to, you know, generate revenue off the same customer. And those little incremental add-ons can add up quite quickly. So we just need to make sure that everybody understands that everybody has to make money. Everybody has to have a slice of the revenue, but it can't be disproportional, because then you create imbalance in the ecosystem and you destabilize it again. So making sure that everybody is financially aligned is very important. We can't have everybody saying, well, I want 1% of the gross written premium on this particular policy, because then you're going to end up, you know, taking all the money. And then the brokers, the UMAs, or the insurers are going to be left with nothing. And it's not going to be viable for them. It probably won't even make it past their business case representation to the board when they want to do this. So ecosystem partners need to understand that we all need to come to the party when it comes to the financial viability of this flexibility. Having said that, though, there is also a case to be made about, do you pay a slight premium for the ecosystem? Because that buys you the flexibility that you don't have to do big replatforms in the future. So you kind of buying freedom up front. It's an idea. But again, you can also maintain this equilibrium of cost in the ecosystem, because if a vendor or a partner in this ecosystem becomes a bit greedy, well, guess what? You just decouple them and you plug them back in again. As we saw with that slide, there are hundreds of insurtechs, insurance companies themselves, or B2B service providers. You can change them if you need be. So you do have that ability in the SaaS world to couple and decouple quickly, which means that you do protect yourself a little bit from the long-term financial commitments that you need to make. And then this one always pops up, but it is so super important that we need to make sure that the people in our ecosystem partners, be it tech or service providers or carriers, we have to have a culture fit. if there isn't a culture fit in one of the areas, again, it's going to destabilize the whole ecosystem. So you need to do good DD on all of the partners in there. Are they a good fit for your customer? Are they a good fit for you as the policy admin provider? Are they a good fit for wherever it is in the value chain? You do need to have a culture fit. So with the right partners, we have options. This is a slide that I've used before, and this just tries to paint a picture of what you can do when you have options, right? So we saw that picture with the hundreds of insurtechs on it. And if you have a good core platform or a backbone that you can build your ecosystem on, be it the blank Mr. Potato Head, you can then couple and decouple various bits of this ecosystem on there to create unique offerings with each one of, or with the same partners. I mean, if you have 200 ecosystem partners and a core, and you can connect into all of those, the variations that you can create IP on its own. So using a little bit of this ear and a little bit of that nose, that creates a unique offering. Now, just to bring it back to insurance a little bit, this is just an example of an ecosystem partnership that we've created. And this is particularly in the motor space. So effectively what would happen here is that you would have Auto Trader, and you can then buy your motor insurance directly off of Auto Trader, talking to the embedded insurance that Daniel touched on earlier. And that is done by an API. So it talks to the core system. So we know that the policy has then been initiated. We can then create a customer record in your CRM so that you can start tracking this customer a bit more in your preferred one. In this case, it was just Salesforce. During the quote and buying journey, you can use someone like Picasso Inform to really drive down the number of questions asked, because what they do is that they augment the data from multiple data sources, which means that you drive down the questions and you can quote and bind a customer in less than 60 seconds. That again enhances the customer experience. You also understand your risk a bit more. If there are potential flags on that particular risk, it'll feed into Curator, a super cool rating engine that can then pump out the cost of that premium or auto adjust it depending on how those rates change over time. You can then pop it into Emburse, which then does your payment collection. And what Emburse does is that they in themselves link into 30 other payment gateways, be it Starling Bank or HSBC. And again, you can then auto direct where you want your payments to go. You do all your communications via SMS. Well done, you've bought now. And then when a claim happens, we have people like Extract and the data company that can assess that claim coming in. Is there potential fraud on this? Was the accident, happening where the people said it was? Where does the liability sit on this particular driver? What is the predicted damage of the vehicle? Because we know it's a BMW 3 Series, and with the telematics device put in there, we know it came from this side, so the damage is X, Y, and Z. We can then pay the claim or approve the claim and then put it through to your supplier managers, someone like Codeplex as an example. And then on the back end, feed all this information into your accounting platform, be it SAP or Sage or whatever it is that you use, and then visualize this all on your Power BI or ClickView dashboarding. The point being here is that this is just how you can then take some of those components from that huge landscape of insurtechs and create something unique. And if we just dumb this down a little bit, what this effectively means is that a customer, an insurer, can place their products within any affinity partner, be it an Auto Trader or even a lead gen like a Starling Bank, a newer bank marketplace. I want to buy insurance. I'm a Starling Bank. Click there, boom, and you can insure in 60 seconds. But where the real magic comes in is that if you then have an accident and you have an IoT device or telematics device in your car, we can know very quickly, okay, right, this was an accident of 15G from the right side in Toyota Corolla. That means that the predicted cost of claim is going to be 20,000 Rand. Now, we also know that the chances of that claim or that FNOL being fraudulent is very low because we've assessed it through data, people like the data company and through Extract. So we know there's a very low likelihood of fraud on that. We also know that, that where the liability sits on it. And we then can use rules engines to go, right, well, if this, then that, if this, then that. And effectively what it means in simple terms is that based upon the rules that you set as the insurer and based upon the fraud likelihoods, you can do auto payments. So you can have that claim paid And SPM notified that we need to get suppliers ready for this before the person has unclicked their seatbelt of having the accident. They would get the SMS that we know that you've had an accident, we are settling your claim, and don't worry, we're sending someone to come and tow the car for you. This happens in milliseconds, and this is all to do with APIs and ecosystem partners. So that's just how you can change someone's life in a real way with ecosystems. That's why we find it so exciting. So just to close off, and just something to think about, so let's not be a dinosaur, let's not get hit by an asteroid. And we often joke about the insurance industry being a bit like the dinosaurs. We can change that. Let's open up and create better ecosystems to enhance our customers. Very importantly, for your personal roadmaps, when you build out your company strategy, make sure that you have USB cables or Bluetooth or Wi-Fi. Just adopt the concept that we don't know what is going to happen tomorrow, and we have to have an open mentality about being able to plug and play as we go along. And then lastly, have a vision and create your insurance art by getting some experts in to help you paint the ecosystem and the journey that you want in the insurance space, like we just showed in the previous slide. Well, that's me, Tony.
Andre, thank you very much. That's great. I mean, that's exactly what I expected from you. So thank you very much for that. Yeah, I mean, it is probably the most, as I said in the beginning, fascinating and most exciting part of the insurance journey, and especially the innovation journey. I remember when I started in the industry, I've always been a big proponent of partnerships and collaboration and working with people, etc. And I've had many of these sort of cases where we did exactly what you sort of described there, but it was so pedestrian and it was so manual and it was so actually driving to somebody's office to go and talk to them about what they need to do, etc. And all of that has now been automated, and it's just like all of those collaborations and partnerships on steroids. And I think for me, the most exciting part of all of this is that everything is scalable. You can start small, you can go bigger. Even small players can participate in a big game because they can plug in now what they need and they can scale it and expand it in the future. So absolutely fascinating stuff. So I think the first question, and Mashiteng asked this, I think you've probably answered most of it. He asked, please elaborate more on ecosystems in insurance and technology. And I think you did that very well with your case study. The second one asked, and maybe we can go a little bit into this a little bit more, Leroy, digital modularization of the insurance stack opens us up to cyber attacks to one or more modules. Is the risk any different to normal operational risks, or is it a different approach that is needed? And I think probably both of you have got experience in this and can maybe just pop in a few thoughts.
Yeah, absolutely. So look, once we start popping everything into the cloud and we have these various areas, there are obviously more points of penetration, and there is a risk of cyber attack. But it's also important to remember that those ecosystems are built with that in mind. So when you look at people like Azure, AWS, Google Cloud Services, they have quite substantial security in place, more so than the traditional on-prem legacy. So whilst there is risk and there is more points of entry, you do de-risk quite a bit because all of a sudden you are leveraging massive security capabilities. That talks to infrastructure security. On the application security side, also, again, if people are taking the API first approach, it also means that they are taking risk seriously. And that in their design modeling, they would have ways and means to mitigate this. Look, cyber on its own is a whole day's worth of talking, and how cyber risk has gone up, and how it's being solved at the moment, and how do we manage the risks, and how big this is. It's really exciting. But I think in short, my answer would be is that yes, it does create it, but it is still less risky than the traditional mechanisms of connectivity between on-prem systems. Daniel, I don't know if you would agree with that.
No, 100%, Andre. Yeah, I mean, it's clearly as a service provider, as we both are, into the industry, and it's I'm sure, like yourselves, a top priority. We in multiple different laws and regulations and requirements imposed on us, both by, I guess, our partners who we servicing, but also then external bodies. And so I think, like you, would take it very seriously, and we have multiple different mechanisms to mitigate that, and penetration testing and all kinds of weird and wonderful things. But I think the short answer to it is that you made a better point, is that kind of the legacy systems out there often don't have these things, and just because they might not be always connected in some sense doesn't mean there isn't a risk, and that risk. It's very topical, cyber insurance as a risk, but some of those risks always existed, and actually by moving to the cloud, you're actually mitigating a lot of stuff. So, I think it's very much, as a service provider to the industry, you have to take it seriously, and I don't think either of us would exist if we didn't. It doesn't mean the risk doesn't exist, but you take it seriously, you deal with it, and you commit accordingly, and have expertise internally to ongoing assessing it, monitoring it, making sure we're compliant.
Yeah, I mean, the regulators are all sort of tasked with protecting consumers and looking after them. If we look at the cyber being just one small part of the challenges that consumers also face when doing business with whoever in not just our industry. From both of your sides, somebody asked a question here: how is regulation or legislation kept up with this digital change and so many new entrants into the market? What has your experience been, first of all, Daniel, with linking up with different providers, etc., and providing stuff that sometimes is quite new?
Yeah. So look, I mean, I think it's very much on a case-by-case basis, and they're different, different markets, different requirements, of course. And so, maybe I'm guessing the audience is predominantly South African, so let's answer it in that context. If we look at European markets and more developed markets, there are a lot of things called sandboxes and environments where things can be tested. The regulators are very much working with sort of insurtechs to understand, solve problems, and change. I'm not saying they're not doing it here locally; they're doing it here locally too. But I think the pace of it may be slightly different and quicker and faster in different markets, and in other markets there just aren't any requirements; they just don't exist. So it's I guess what I'm highlighting is very much on the market by market basis. I think I think we've been quite amazed coming into the industry how. If you look at the phase regulation, it speaks about a broken call center. It doesn't speak about any other point of distribution. And of course, in an embedded type transaction, there's neither broker nor call center potentially. And so there are these weird anomalies that exist in the market, which then, from a regulated entity like an insurer, becomes, so how do we sign you off? How do we sign this product off? Because it's not. Doesn't fit into the kind of regulation. So there've been those interesting, not challenges. Obviously you find ways around it, and you ultimately, why does the regulation exist for? Because if there's a risk of advice being given or selling happening, whatever the case might be, and so that's why the regulation exists in the first place. But obviously, if you can prove that there is no intermediation and risk of a sale, then you can sort of work around it. So I guess what I'm trying to say is that I think there is, if I go back 5-6 years, I think there was little engagement. I think that's radically escalated in most of the markets. I think in some markets it's become very collaborative, and there's a real understanding that the market is shifting, and so do the laws need to do so too. But I also wouldn't say that in any market that we've serviced or partner that we've serviced for product that there's ever been a complete kickback or inability to go to market based on the regulation, if that makes sense. So I hope that answers the question.
Yeah. Andre, anything from your side, having now experienced South Africa and the UK?
Yeah, look, Tony, I think from a fundamental conceptual point of view, technology evolves a lot quicker than a regulation does. I mean, this is what Moore's law is about, is how technology, how quickly it changes. And regulation is ultimately driven by people, and we aren't evolving as quickly as what our tech is doing. So there's always going to be this element of dragging regulation along to a degree. I think, as Daniel said, that there's been a refocus of it. It's come a little bit more to the front. And we see instead the regulators looking after the consumers a lot more. And with data exchanging happening at such a large scale these days, it's a good thing that we have things like POPI and GDPR in place. And we've often seen, how that has really kept the people on their toes about, just as we mentioned, the cyber risk, just double checking before we start transferring data. So it's a good thing. So regulation is helping to shape that. Having said that, I've seen a couple of cases, unfortunately I can't mention here, but where insurtechs have tried to launch and they've got a really, really good idea about solving real world problems, but the regulation hasn't caught up to it yet. It doesn't mean that they aren't trying to. The regulators have said that they understand that we need to change some of the laws to allow these new solutions to come to market, but they just can't at the moment. So there is a little bit of a challenge there. One of my favorite ones that I still haven't gotten a full answer to from anybody is that, we were talking about blockchain earlier, and there are some really good use cases for DLT in the insurance space, but and also open databases. But the question is then what do you do about, how does that conflict with things like POPI and GDPR? What do you do about the right to be forgotten when you are never forgotten? So those are just some interesting concepts and some things to think about.
Thanks, Andre. Yeah, I mean, also then just to look at, you mentioned now starting and wanting to launch something and the environment's actually not right. Both from your side, Andre, and then also from Daniel, in terms of this whole ecosystem and the collaboration, I mean, it is quite involved. And as you said, you have to start with the need of the client in mind. Are you going to make the client's life better, etc.? How do you find companies' approach to this? Do they actually start on the ground, on foundation level, do their research, do their strategy in terms of what do they really want to do for their clients, etc.? Or are we still seeing too much knee-jerk, just grab some technology? How do you see that, Andre?
Yeah, it's a bit of both, and the needle is moving in the right direction. So I mean, the consumers these days, the buying behavior that we see within the aging millennials is, it's quite drastically different from what it was before. So people are understanding, that the need to change and to give the customer what they want. But as you say, I think a lot of it is reactive, at least from the incumbents. They are reacting to loss of book, to people moving off, to MGAs breaking off and cannibalizing some of their products. But again, in the insurtech space, there's a lot of people understanding what it is the customer wants, asking what the customer wants, and then building that out. But that's, again, a challenge about how do we bring that back into the incumbent. So yes, I think on the more tech-driven side, there is an understanding of what the customer wants, or a real desire to deliver something for the customer. But there's still a bit of a push and a pull happening from my view.
Daniel?
Look, I think it's I think it very much is circumstantial. I mean, we've seen situations where, I guess, going back to COVID, where potentially a channel was only had agents, physical agents in stores. They had no digital capability, and obviously with lockdown, suddenly online increases, and now how do they solve for that? And suddenly there's quite a big knee-jerk reaction to solving that, where it's maybe a conversation that's been considered for 2 or 3 years, and is e-commerce going to work, and is it big enough, and whatever, so there are those types of shifts that happen, and obviously as the world shift based on COVID, I think it's obviously very much complemented platform enablers like ourselves, and I'm sure Andre would agree, solution providers enable that digital points of contact. It's really been a quite explosive kind of 12 months or whatever it's been. So there's an element of that, a force to shift, but the other ones that are more strategically looking at things and saying, okay, let's not be sort of caught on the back foot. Let's actually try and plan ahead, and initiate innovation teams internally. I mean, I'm thinking about major local. It's by exception, I'd say, more generally, but there certainly are the bigger insurers. Some of them are starting to say, well, look, we can't just leave things as they are. We actually can't solve this internally, and they're initiating some innovation teams that then are looking to solve it externally or in partnership. So that's a more sort of forward-thinking, planned approach, I guess. So I guess it's a little bit of both. I think it will shift more so. I think as more and more examples of success are seen in the market, and as the opportunity around this ecosystem play actually materializes. So as incumbents see that actually they don't have to do it internally, they can do it externally, they can find the right partners, they can solve the problem or opportunity that they have in different ways. So it'll extend from there, and it'll move in the right direction, because that is the right approach, right? It's rather been thought about it and planned, versus having to now solve a problem that you have, which you can't solve because the market has shifted and you've kind of been caught a little bit off guard. So yeah.
Yeah, very interesting. I mean, somebody asked an interesting question here, Mashi Teng. How will we manage the risk of partners that don't have a technology fit, who has to build collaboration? So my gut feel answer is shape up or ship out. But that's not necessarily the right approach. Can you push somebody into a technology fit, Daniel?
I think the market pushes it. So I think as the market dynamics change, if you don't change, you're going to be caught on the back foot, right? So I think that's where ultimately, there's got to be a need for change, right? So if there's not that need for change, then why change? It's like, I've got a successful business, or book of business. It's it's profitable, it's growing, it's whatever, and that sort of silence. Change that's happening that maybe competitors enabling, or new channels, new disruptors are sort of focused on, only becomes reality when it becomes significant, and then it's almost too late. But I think it can be facilitated. I mean, I'd rather like to say that certainly from our approach is very much to try and facilitate the change and say, look, we understand you've got a very successful business today, and it is successful, but what about these other parallel opportunities? And here are use cases, examples of how, by doing whatever it is, it's, driven incremental distribution, it's saved on costs, it's a whole lot more efficient. And so it's a more facilitative approach to get that buy-in and understanding, really understanding, because I think the buy-in is fairly obvious thereafter. I think there's also, and I just spotted this question, I don't want to maybe change the subject, but it is kind of related, is this whole notion of, is there still a need for a broker, and what happens to agents and brokers and whatever. Absolutely. I mean, there's no, it's not about digital only, at least that's not how we think about it. I mean, still the bulk of insurance that we see today being sold is through an agent intermediated kind of process of some sort. I think it's about marrying up the complement in that, and then marrying up incremental opportunities as things shift. And one only needs to look at the retail environment in e-commerce and how that's grown. It still is only, it's still not 50% of any market, right? In terms of e-commerce sales, and that's been a progression that's happened over the last 25 years, and it'll never be 100%. So I think it's very, very similar. In the insurance space, I think it's often a valid question that's asked, is that, do I still have a job? Is there still a need for a broker? Absolutely. Absolutely there is, and there always will be, I think, in my opinion, because more complex type insurance products do require the good advice that often brokers can provide. So anyway, just...
Andre, from your perspective, when you find a technology platform that one of your partners or clients might want to use, and there's a bit of a difficult fit, how do you deal with that?
No, that's a great question. I think Daniel answered it nicely from the insurer or the core perspective. So that I'll answer it from an ecosystem point of view then. And it's exactly that, Tony, is that you often have that challenge where there is a particular partner in the ecosystem, and then we need to consume them, or we need to be able to link them up. The question effectively then becomes, is that what business problem are they solving? So let's identify this first. Let's just do an analysis. If they are solving a problem that can be solved with one of 20 other people in a particular area that we can plug in relatively quickly, well, you then make the case about, is the integration that you have to build to this existing one worth the effort for your customer, or do we simply replace them with someone else? This is the beauty of the ecosystem. It might sound ruthless, but that's effectively what you do. If they are unique and we have to use that particular partner, well, then you manage the risk. Then you make sure that you try and build a mechanism, or at least a generic connector between the two platforms to use that. So if they don't have an API first approach, they don't have APIs, we'll do something else. But you'll still try and build something generic, because what you don't want to do is to continuously create unique connectors between ecosystems that then incur additional maintenance to keep them up to date, hard-coded APIs as an example, or or data transfers between the two of them. Because if you have to incur costs on supporting that, that costing gets transposed back onto your customer again, and then their TCO lifts, which means they in turn again don't have the margin to go and start selling insurance at better prices to more people. So you really have to try and manage that down. And then on we're talking about the B2B stuff here. The one thing that we've seen, and we keep quite a close eye on how the investment roadmap or the investments look into insurtechs at the moment. And and I'm sure Daniel does too. They just went through a very, very, very cool raising with a very cool partner. 630 and them are very, very nice to have a feather in the cap there. But what you need to also understand is that some of this investment has changed. 2 years ago, 75 to 80% of the investment was going into how do you access new customers, how do you sell insurance directly to customers, the e-commerce approach, etc. The capital markets have realized that this is not necessarily the exact right approach, and rather investing in organizations like Genays and Click2Sure, etc. But how do we lower the cost of operations? And this is what is important for the brokers too, is that the intermediated market, for them to stay relevant, they are going to have to drive down their cost of operations. And Daniel touched on that a bit earlier. So if you can really drive down the cost for them to operate, service policies, then the advice margin can stay there. And people have identified this, which is really exciting. So there's so much more investment shifting into how do you service the intermediated market now than there was 2 or 3 years ago, which is exciting too, because it means that people have acknowledged that they are relevant.
So thank you very much for that. In closing, I'm maybe just going to ask you sort of a bit of an umbrella question. Whether you're an intermediary or an insurer, etc., from a collaboration point of view, what would you say is the most important thing for you to sort out first on your own side before you take that first step? Andre?
So it's always important to understand where you as a company are going first. When it comes to anybody that you want to add to the ecosystem partner, it is important to know that your product roadmaps are not going to converge. You don't want to start overlapping too much. And for you to know where you are going and for them to go, you need to understand what your roadmap is also. And then you also need to know where your business is going, because you don't want your business plan and your ecosystem partner's business plans to diverge. So it's about understanding what it is that you want to do, what you want to achieve, for you to build your own roadmap, follow our own advice, and have a clear understanding of where you're going. Because once you have direction in that, you can then find the right partners who want to go in that same direction.
Daniel, closing there?
Yeah. I think it's different approaches for different types of partners, but I think it really comes down to the what's the opportunity, and then understanding the components of what that makes components of that make it ultra successful. So and what might you already have and what might you need to solve for. So, and that could be a variety of different things. So if you are, let's just use an example, an affinity type partner that has customers to whom you would like to offer insurance, what do you need? You need an insurance structure, underwriting capacity, of which you can choose different formats essentially, and potentially you need some sort of technology layer to enable distribution, administration, and reporting of that book of business. And so it ultimately comes down to really understanding what is the opportunity, what am I trying to solve for? Am I just trying to embed one line of insurance on one product through one channel, and that's all I want to do? Or am I trying to build up an insurance book and then potentially even become an insurer? And that's a very different, would lead one down different paths. And the answers to those questions then lead to the right kind of solutions and the right structures and partnerships, which then gets the best end result. I think a lot of people, and we see this often, is that the problem is distribution. Today, they maybe don't have that digital enablement. Let's just use into e-commerce as an example. And so that's what they're looking for a solution for. But actually, what they're missing is that their administration costs, the functionality associated with that is as potentially broken or as rudimentary, and fully understanding what it is that you're looking to solve for, what the problem is, what the opportunity is I think the starting point. And if you can do that in a neutral kind of environment, understanding the components of how to solve that, which I guess is where potential consultants, and I guess we do internally, and I think Genesis do too, is it's part of the process of unpacking that partnership and how it could work, and if there's value to be had, because it is a partnership that has to exist, and all players need to be fairly rewarded. I think Andrew made a very good point earlier around that. And once you have those components, you understand it, that's when the unlock truly happens. If you try and sort of do it piecemeal, you actually just create more complexity and more potential disablement and actually more costs. So anyway, that's my view.
Very interesting. Just a last thought. I mean, there are quite a few comments here. Very nice. Thank you to the audience. About, and maybe the two of you can also give us a bit of your feedback. Somebody was asking about the skills needed for this new environment and to participate here, especially as an employee as well, not just as a company. What sort of skills do you think, and where do you get those? Daniel, maybe start with you.
Sure. I guess it depends. What I mean, are you working for an insurer? Are you working in a sort of affinity partner type relationship? Are you are you currently a broker? Are you some sort of administrator? Have you sort of got a complete open canvas to potentially wanting to get into the industry? So I don't know, maybe a graduate.
Yeah. Sorry, Daniel. The question was sort of around data scientist skills, programming,
okay.
etc. Yeah.
Okay. So yeah, I mean, look, in the data realm, I mean, there are obviously some very specific kind of courses that a lot of universities these days clearly offer, and are components of more traditional degrees, business science degrees, BCom kind of degrees. There also are very specialist courses just on this as a topic, coming out of different universities, and there's even sort of technology courses that are online that you can do in this realm. I'd have to do a bit of research, but if you did a bit of searching online, there's actually a lot of stuff out there, and one can do short courses. You can do degrees in the stuff, but actually it's evolved quite radically over the last 5 to 10 years. It's a massively sought after skill. I mean, if you even have partial skills in it, I think you are can almost name your price in this modern age that we live. I'd go out to see, how deeply you want to go. If you just want a basic understanding, I think there are lots of online courses one can do. I think there are also specialist online courses that would give you the ability to almost consult and advise and get involved in that realm. And of course, then the proper degrees that one can do through a multitude of different universities. So I don't know if that's helpful. Yeah.
Sorry, Andre, your sort of thoughts?
Yeah, just to echo what Daniel was saying, is that there's obviously a multitude of technical courses that you can do. You can go learn about how APIs work, do Angular, .NET courses, etc. Do your data science courses, learn about how Python works, etc. Those are all just skills. But if you plot it out again on a trend, what we are seeing quite a lot is that there's a reduction in technical skill requirements and an increase in business and insurance understanding skills. So 10 years ago, if you wanted to make a change to an insurance platform, you had to learn the code. You had to understand the proprietary code that particular system was written in, go deep dive, and then do that code change. And therefore, you needed to have technical skills. At the moment, what you probably need more is what you would call a business analyst or a product owner type of skill, to understand the business, to understand the insurance, to understand the underwriting department, and then to make those changes with no-code toolings. So we are seeing more and more no-code tooling coming in, which is pushing the emphasis away from technical skills and rather to a business and insurance understanding skills. So my advice would be is to be an insurance expert first. The technical skills for the particular job that you want to do can be learned quite quickly.
Yeah, I find myself, just from my history and experience, understanding all those different role players and partners and how they interact and how they sort of are linked to each other and how you can exploit that ecosystem in a good way to enhance your business is probably a very, very important skill going forward. Yeah, absolutely fascinating. Guys, it was really good. I mean, there are a couple of other points here, maybe to close. Last one is a question here. Are you finding that insurance companies are adapting to the digital change quickly enough, or do you think it's still too slow? Maybe a quick comment, Andre.
Yes.
Look, the exceptions. I mean, go for it.
No, go for it, Daniel.
Look, more broadly, I'd say not, but of course there are exceptions. I think there has been it definitely is a shift. I think that shift has been more recent than going 2-3-4 years ago. It was I think it was very much exploratory. I think again it's also very much market specific. So if we see what's happening in the US and Europe and some of our engagements there, it's radically different to maybe even what we're seeing right here in South Africa, I'd say. But there are always exceptions, and I think what's interesting to see is how things are going to play out over the next 5 years. I think those that are taking that approach will definitely win. I think those that aren't taking that approach and trying to solve it internally and closing off to this ecosystem play and not realizing actually how the market is shifting, and rather using sort of blocking our tactics to rather say, look, we own it, we have it, we are the biggest, we are the best type approach are going to struggle, because you can't resist how the market is shifting. You can't resist the enablement that's happening and how things are changing around us. So I think that would be my view, quite simply.
Yeah. Just to add on to that, Tony, from the larger insurer side, globally, the answer is simply no. Insurance fundamentally hasn't changed in several hundred years. We know this. We've changed distribution models. We've changed how we get insurance to market, how we rate it, how we use data to change all that, etc. And the insurance industry didn't really see last year as a big asteroid moment. But I think what is going to be the asteroid moment for insurance is when we start seeing people like big tech coming into our space. A while ago, and I'm not going to mention the name of the company because it's not a complimentary comment, I had a conversation with the CIO of a very large European insurer, and we were talking about insurtech. So the insurtech is making these changes quickly, right? And his opinion of this was that, well, we have cash. If once these insurtechs make the changes we want, we'll just buy them. So we don't have to make change. We've got the cash, where the cash controls the markets. Well, I hate to break it to you, but big tech has way more cash than any insurance company does. And if they come into the market, which they are imminently going to do, that'll be the asteroid moment. And I think that is going to catalyze substantial change within the insurance industry. Then they're going to have to scramble quite quickly to make the change to counter that move.
Definitely, yeah. We've seen some of those sort of tsunamis hitting other industries. And once the tsunami hits, there's no more trying to adapt. That's it. It's happened. It's too late. Yeah. Fascinating. Andre, Daniel, thank you very much. Really nice session. Thank you for your insights and so on. We do have your contact details, and unfortunately for you, if people ask, we will give it to them.